What's going on, traders? What I want to talk about are some of the most common patterns that we're looking for each and every day in the market. And this is cool because I'm going to be able to show you some trades that are actually done today on some of these patterns. And these are the same things that we look for every single day to pretty much make money trading in the stock market, whether that's $500 a day, $1,000, a couple thousand, or lose money. Either way, this is what we're looking for in the market. Now, regardless if you have like a $500 account or if you have a $20,000 account or if you're over the pattern day trading limit of 25,000. Either way, these are the same things that everybody is looking for. So this should really help some of you guys that are just starting out. What I want to do is take a look at the stocks we traded on the day. Here we're going to look at Groupon, GRPN. This stock reported its earnings today, and as you can see, it's been going up for a good portion of the morning, okay? Right now, you can see I actually still have 100 shares on with the stop loss in at about 23.84. It looks like that's probably about to get knocked out. Not that I really care too much, but hey, it probably is. So what I want to do is actually take this off for a second and show you guys our trades. All right, so ended up walking away with about 500 bucks on the day. Our first trade here was some pretty big size right in the morning as we try to catch kind of an early morning breakout that didn't work. So we ended up taking it off, ended up getting about $200 there. And then you can see we traded a little bit later here, got in long for a little bit of a breakout and sold on the way up, and we're still holding 100 shares. And that's what allowed us to get up to 429. Had about a $500 green day before this big pullback that's obviously taken away for some of the open P&L. You can see here where it says P&L open. That means that's how much money you have, profit or loss, that's still open in a trade. The P&L on the day is how much you have made thus far, also counting what you have open that's still fluctuating based on the stock going up or down. So let me take these trades off for a second, and then I'm going to show you kind of the overall patterns that we're seeing. So we'll start here with the second trade. The second trade we got long here on kind of a breakout. Well, I can just draw a nice little pretty pattern here for you. This is one of the most popular patterns ever. It's the bullish pennant, the triangle squeeze, the bull flag. You'll probably hear it called a bull flag, a bullish pennant, a triangle, a bullish triangle, a flat top breakout. Pretty much all of those are the same concept. And that is that price is just kind of channeling sideways, getting tighter and tighter until it gets to an edge where it has to pick a direction, either it being up or down. Now, how you determine which way it's going to go up or down or out of that wedge takes a little bit more than just looking at a wedge, which we're not going to go into quite yet, but I want to give you guys a scope of things. So here is a bullish pennant that we ended up trading, and that's primarily why we were getting long here on that breakout, okay? Now, the first trade that we got long on was pretty much in this up move. The reason we got long in that up move is because many times these stocks that have these really big overnight jumps like this up and then just kind of trade sideways, a lot of times can have these really nice early morning jumps that just go running, okay? But in order to get that big run in the morning, typically we're going to have to break this white trend line that you see right here. That's going to be bad. I should do this one. Oh, that's it. It's got to break that white trend line. So when we got long in the morning, it jumped up to that zone and it just couldn't really get through, so we took it off. And as you can see later in the day where we had that pennant, that one actually ended up breaking that white line, and that's why we held our trade longer there, because we've seen that the momentum was shifting from kind of the downside to the upside as we crossed through that trend level, okay? So that's why we were holding on the second trade and why we cut out so quickly on the first trade. A lot of times the early morning volatility can lead to a big jump really quickly, but obviously if it breaks out of certain levels, in this morning it just was struggling, so we decided to take it off. So we ended up walking away with about 400 bucks, give or take, depending on what exactly happens here on out for the rest of the day. And so the key main takeaways are big overnight jump, gap, kind of just trading sideways, okay? And then the next one is a very well-developed bullish pennant, all right? Now what I want to do is take you guys over to a penny stock. So we traded the penny stock CDNT today, or CNDT. All right, as you can see, it's fading down right now. Ended up making $648. For the amount of shares that I traded on the day, that wasn't really all that much money. Then again, I usually trade a little bit bigger size, and I'll take things off a little bit quicker maybe than some. But this trade today, or the trades on this stock today, were pretty good. We had one mishap in there that led to a pretty decent loss, which was then recovered pretty quickly. All right, so we have a penny stock that is reporting earnings. Big overnight jump, kind of trades down in bases and creates a support down here. All right, and then we kind of go through a dip and then a run up. Now, you can almost think of this exactly the same as I showed you on Groupon. Remember how I said Groupon, in order to get the bigger move, it has to break through the white line? And you can see on this stock too, though not the same exact pattern and maybe not the same exact trading process to the white line, you can still see that the same concept applies. We run to the white and then we sell off. We go back up to the white and we sell off. Now, if I were to go back to Groupon, I'll show you that once again because it's a pretty good comparison between the two. So though it might be on like a smaller scale or a little different, you can still see the concept is the same. We run up to the white, we fall back. We run to the white, we fall back. We eventually get over and we have our breakout. Though it may not have lasted for forever, stock does break out. Now, if we go back over to, again, CNDT, you can see that the same concept applies, all right? So the main things that we look for in these penny stocks to make sure we're getting at a good level is what we're trying to do is identify risk to reward. So a lot of times with the penny stocks is the ones that actually run up all morning and then by the time the market opens, they're trading really high. Those are more susceptible to actually crashing, okay, because the risk is more favorable down. And the ones that actually kind of do this, believe it or not, and then fade down to support actually have a good chance of doing like the bounce, okay? And then if they can get through the white, they'll usually have the bigger run. Now, a lot of you are going to be asking me a question in the comments. Connor, what are those squiggly lines on your chart? The squiggly lines are called standard deviation. The ones that you're seeing on my chart are a custom coded script you can get at our website, boilerroomtrading.com. There is a link in the description. I also have another video on YouTube that's completely free that will show you how to set these up, but you will be missing a couple features that we have because it's a custom coded one on my screen. That being said, I will link the video that I'm referring to in the description as well. And if you feel that you would like to upgrade to the cool ones that I have on my screen, you can do so at boilerroomtrading.com. But you don't have to. We've provided a free video that can get you pretty much what we have, but you will be missing a few features. So, that being said, what we're a lot of times looking for in these penny stocks is a first target. Our first profit target will usually be the white line. And then if we can cross through, then maybe we'll target, somewhere in the yellow or somewhere up here, okay? Now what I want to do is put the trades on for the stock, and that will give us a little bit more insight on how we are actually trading this, okay? So we'll start with the first trade. The first trade was me actually getting a little bit excited to trading and jumping in a little bit early on a top that I ended up losing some money on. But I had really good confidence that this stock was going to go up to the white line. I just bought a little bit too quickly on my first trade. I ended up losing about $500 here today. So I'm going to scroll this up like so we can see a little more. When you look at this first play, we have a nice kind of rounding bottom, right? We kind of just come down, rounding bottom, and we start to move up. At this point, I was already kind of telling myself this was a long on the day. I could feel it. So you can see I get long like 6,000 shares on this top, and I really thought we were just going to kind of press up right away. Typically, I don't trade like that, and I kind of got ahead of myself because I was excited about the stock. All right, so I ended up selling into this pullback and losing. Anyways, I see that the volume, right, and here we use a custom volume system. So I'm watching it, we're pulling back, and next thing you know, you can see it's starting to shift to green in our buying and our volume. So long story short, I get long 8,000 shares this time because there's more confidence. I was down 500. As soon as we broke out and popped up, I sold 6,600 shares because I was able to instantly basically flip myself to a green day. So I instantly took off some shares there. And then you will see as we keep grinding up to the white line, I sell a little bit more. So we pop up, I sell 6,600. We go up a little bit more to 419. I sell 600. We go to 437. I sell 500. And then as we start to kind of fade back down, I close out my last 600. And then I seen we were going into what's called like a little bull flag here. So we had a bull flag move. Then I ended up going long on 1,000 shares. So you can see I dramatically decreased my position sizing. You can see I was 6,000, then I was 8,000, and then I went to 1,000. That's because I had already once, again, and let's cover this trade real quick. You can see we do the bull flag breakout, and as we kind of pop over the white line, I sell 600, 200, 100, 100, and we're all out for the day, and I haven't touched it since. If I take these trades back off, clean the chart up just a little bit, you will see that on my last trade here, when I went 1,000 shares, it was far less than the previous ones because at this point we have already watched it go up once and get rejected. The next time we're going up, you will notice that we actually, I think we had a little bit lower momentum, okay? So let me bring up RSI. This is another common thing I'm teaching you. On your first run up, you top, and that first kind of pullback, a lot of times it will get bought into. You can see we break out again. It doesn't go for nearly as long as the first move, and you will notice that if you use relative strength index, you will see that this has diverging momentum going into the new high. So we have our previous high, and then we have a new high. So that's uptrending, right? But your RSI is downtrending. When you see that buying into a new high, a lot of times you might be able to tell yourself that that run won't last and will end up reversing back over. So those were all kind of the reasons for entering and exiting trades the way I did and the position sizing I did. And so if you're looking to get into this industry and this game, it can take you quite a long time to learn all these little tricks and how to maneuver with position sizing and when to do this and when to do that. But if you can eventually get through all the learning process, it can be a very fun thing to do, and it's an awesome lifestyle to live. So that, ladies and gentlemen, is pretty much what I do on a day-to-day basis in and out of the market, amongst a lot of other business ventures that I do. This isn't the only thing that I do. But in terms of intraday trading, this is typically what we're looking for. This is a completely different game than long-term investing. So these are sort of the tips and tricks that we have to show online for any of you guys to really understand what's going on here. So I hope you guys like the video. I hope this is definitely educational. You're learning here. So if you can, please give the channel a thumbs up on your way out. We do appreciate it, and we'll see you guys on the next video. Everybody, take care.